welcome to the closing beat, everybody. It's Tuesday. Welcome, happy Tuesday. Welcome to the closing beat, everybody. We are financial advisors here at Jazz Wealth. Hope you're having a good day. Did I miss a space launch or something? Was that happening?
No, I think we were just counting down in the chat till the show started.
Oh,
I think.
No, I like to catch those launches there. But anyways, we're financial advisors here during the day, but I do like watching them space launches. Those are pretty cool. Hope you're having a good day out there as well. Jazz Wealth officially ranked as one of the best financial advisory firms of 2024 by USA Today. 2 years in a row. So something going on. Hey, what do you think of this? What do you guys think of this little logo here on my shirt? It's pretty cool, huh? That is made by Kevin. Anyways, we're going to talk about the stock market here today because we got the market pulling back. You got Bitcoin falling apart. Rates rising quickly, and then healthcare surprise out of nowhere with the Medicare thing that came out. So let's just dive in and take a look, man. Let's go. Here is the S&P, and last week I made a point to kind of show you the both the slowing of the buyers on the way up and the lack of sellers on the way down. So anytime you have an uptrend like this and it gets, see how it was like nice and volatile in here, you know, decently volatile. And then all of a sudden it tightens up, tightens up, tightens up. Why would it tighten up? Why would price tighten up? Well, we have less buyers pushing aggressively to the upside, but we don't have any real interest in sellers. So we've got less on both sides there. However, the buyer's winning, of course. And so we're just sort of chiming our way up here. Well, the technical traders and investors out there like to look at that and go, hey, well, when we get to that pinching point, there has to be a moment of adjustment, redecision, excitement again, right, where we go higher. And so we were talking about over the past couple of days and into last week how we're getting close to that big move, whether you like it or not. So it's really kind of fun to see that ahead of time and talk about it, teach about it, and then see it start to happen, in this case, possibly to the downside. Now, the S&P, the drop today, did that bother you? Or did you think like, well, big deal, what is it, right? Now, some of you are going to say, oh my God, did you see that crash today? I know, because I got the emails, right? And some of you are going to go, what are you talking about? It was like just over 0.5%. I mean, it was a little worse at one point, 0.9%. Okay, almost 1%. But that's what the calm, quiet markets do to you, right? You see this action in here, right? All of this, if we would have had the same day like right here, you wouldn't have thought anything of it. It'd just been a normal day because the markets are moving more, right? It's like when the water in the bathtub is moving around, you're just kind of used to that movement. Well, if it's calm and somebody slaps their hand on top of the water, now all of a sudden you think it's a bigger deal than it really is, right? So that's what's happening here. This move today really isn't that impressive. I like that it went to the downside, and I want it to continue to the downside. But I mean, I think it'd be helpful if that's what happened. But it really wasn't all that scary, right? Now, in the meantime, the S&P has given up its year-to-date gains of 10%, right? So we're not up 10% anymore, like, right? Big deal. Excuse me. So I just wanted to point that out, right? The downside here, yes, it takes us under 10% year-to-date. Still an impressive year, still impressive with what's happened today, and also not that impressive with how the decline happened today, right? It's hard to panic there. It's hard to get people excited to sell, or I should say fearful to sell. So nonetheless, I won't read into it too much. I just thought it's not that big of a deal. All right, you got energy here. Energy was by far the strongest today, 1.4% for the energy sector. That beats every other sector by over 1%. This rocket ship type rally continuing here. It's also the year-to-date leader at 16%, 15.96 if you want to be exact there. So you go, oh, what happened to tech, right? I mean, it was all about tech. Everybody was dumping their money into tech. Well, tech has now faded to the middle of the pack year to date. In fact, it's 1, 2, 3, 4, 5. It is in 6th place out of 11 sectors. And that is because the excitement wrapped around the Magnificent Seven and those that sort of are the supporting cast there, it's not there. Add to that, if we go over to the NASDAQ real quick, the NASDAQ, what is that known for? Right? Those are large cap tech stocks, some retail, and then there's this biotech component. There's sort of like this weird, like techie healthcare side of things. Did that do well today? No, not really. It was kind of a tough day. So nonetheless, I wanted to point out that faded to the middle of the pack, the tech sector anyways. If you look at the Dow, This one's interesting today. Anytime healthcare or industrials have a big move, you're going to notice that the Dow is one of those that has a bigger point move on the day. It was not the biggest loser for indices today. Nonetheless, it gives up the last couple weeks worth of gains there as it pulls back. United Healthcare was the responsible party for that today. 210 Dow points to the downside can be attributed to the performance of United Healthcare today. All right. Actually, about 4 points in the S&P are attributed to United Healthcare. So before anybody goes like bashing the big tech stocks for just having an off day, you got to throw healthcare in there a little bit as well, because that was part of it. So, by the way, I want to point out, I thought this was interesting. United Healthcare, you think like, what we talked about yesterday, the politics of all this start to come into play in April, right? It's kind of fun to, I mean, what person doesn't like that? You talk about something ahead of time and then it happens. You're like, oh, okay, that was cool. But United Healthcare is not one to shy away from when it's discounted. Now, I'm not saying this is a discount. It could certainly go further. They have to, reprice their adjustments going forward as far as their earnings per share. I think they were shooting for like $8 to $10 a share. That number is going to change. Just don't know what that is yet. But United Healthcare, fun fact, has outperformed the S&P 8 of the last 10 years. This is not one of those years, by the way, but it has outperformed there. Now, today, as a group, the sort of like medical service, I forget what it's called, medical service providers sub-industry group, right? So we have the index, we have sectors usually inside of an index, we have industries, and then you can even break it down into sub-industries. Well, if that sub-industry that just sort of specializes in the services side of things underperformed today relative to the market by more than it did when Obamacare came out. Was that 2010? Somewhere in there. So the underperformance there today, kind of a big deal if you're paying attention to that stuff there. All right, moving on. So we got the Russell 2000. So that was very quickly erasing the last couple days of gains as well. Now that one was hit hardest today because of the rate volatility. Remember the Russell 2000, the small cap stocks, they can handle higher rates. The rates where they stand now, what was the 10-year today? 4.36. So that is below average, over any sort of stretch of history, besides if you just did like the last 5 years, right? So looking back over time, we know small caps can grow inside of a higher interest rate environment. Where they have a tough time is when there's a lot of volatility in rates. Volatility in rates is not good for small caps. It's not higher rates. So you hear that all the time. And when you look over at bonds today, right? We're inside of this trend here. Notice we talked about that rally from the middle of nowhere. How do you get any legs on that rally unless it breaks highs? And so all of a sudden, we have interest rates moving higher. Again, really, really sharp rise in interest rates over the past couple days there. And that's going to hurt your small caps until that sort of solves itself or works itself out. Small cap growth today was the worst factor of the market, right? And factors are value, index, and growth, and then you sort of break them down by small cap, mid cap, large cap. Well, out of all those 9 different possible factors there, small cap growth was the worst, small cap index was the second worst, and small cap value was in fact the third worst. So that it kind of sucks. Kind of sucks. Well, the reason for the rise in energy here today, of course, is going to be attributed to oil. And I do want to point out Bitcoin as well, getting hammered. Now, I'll say this one more time, probably a lot more times. But if you can handle this volatility in Bitcoin, then you have no reason to complain about the volatility in the stock market or your 401k or your IRA, your Roth IRA, your SEP IRA, your TSP, whatever it is. If you're out there playing, I get it, you probably don't have as much money in Bitcoin as you do in the rest, but still, if you're handling that, that's impressive. Or can I just throw it out there? Can I do it for all you political people? The DJT. If you can handle that, you can handle a little moving around in your, retirement accounts or whatever other brokerage accounts you have there. Do we have a leaderboard for the old guess the Dow?
We do. And I need your help with one. But yeah, we got David, Tate, Aaron.
Gee, let me guess.
What's that?
Gee, let me guess.
Yeah. So I have a guess. Do you want to throw out a guess? How would you?
A guess of which person you need help pronouncing their name?
Yeah.
Tate?
I was more so, do you want to take a guess on how to pronounce it? Because there's no U in it. That's the confusing part. But Mukadas, that was my.
No, Mucaras.
There you go.
Mucaras.
Yeah, that's actually what Kevin was saying.
Right?
Kevin had it.
Spanish people, right?
Yeah.
Puerto Ricans and the Mexicans unite over here. It's Mucara.
There you go. Yeah, toss the white on it. But yeah, that's your top 5.
Now I'm cheering for them. You know what I mean?
Yeah.
All right. If you want to play, jazzwealth.com/guest-it-out. It's $100, no strings attached, and anyone else in the chat can attribute to that. We don't call you or anything. We're not going to sell your email. It's just a fun game that we like to play, and hopefully it keeps you paying attention because, the market's starting to get exciting, but that's where we stand. All right, let's do some stocks in the news, and then I'll take your questions. If you have any questions, look at the one bar on the screen. It's just one. This here is the first day of the spinoff from GE. So we've got GE Vernova and then GE Aerospace, right? Or GE Aviation, forget what it is. So the way it worked here is you got one share of this ticker symbol for every 4 that you had of GE. So that completed that spinoff. No, right there. It is all done. You can see the adjustment. That is not a decline for GE. That is the adjustment after the spinoff, because now instead of owning just GE, anyone who had it over the past couple days or months or years or decades or whatever, now you own a couple shares of GEV. Those two combined make up the same notion. Well, until that fell today. At the start of the day, it made up the same notional value as you owning the shares that you had yesterday in General Electric. So before we get a bunch of emails on that, you did not lose money. Just go look for the other ticker symbol and you will be good to go. Autodesk, never a good sign when this happens, but Autodesk is going to have to delay their earnings just a little bit there because they're getting looked into. I have some questions about their free cash flow. How you coming up with these numbers? A little bit of an inquiry. It's not an investigation. Nobody's in trouble. But while that comes up, nobody likes to see that sort of thing. It sort of promotes like maybe some irresponsibility there, maybe a lack of guidance inside of their C-suite. So we'll see. Boeing. The Wall Street Journal's got it out for them. I don't know what to tell you. Wall Street Journal coming after them, looking into all of what they're calling shoddy production practices, etc. It was a tough one there, but, it's the Wall Street Journal, so the stock didn't move that much. UBS. So, look, the stock market has a fairly rough day, not all that bad. UBS says, we're going to buy back $2 billion worth of our shares, even in a really, really tough day for the market, which this stock rightfully shouldn't have been higher. Financials were down 0.5% on the day. Even with that, stock is higher. Yet again, another lesson into what investors will reward at the various points of the economic cycle. I think that's fascinating to see, and it's a way to not have to argue with people about where's the economy at. Well, you could just tell, right? Or at least you could tell where everybody thinks. All right. PVH with their clothing and whatnot there lowered their guidance quite a bit, actually. A little bit, maybe a decline in sales overall to be expected. You guys not spending money on the premium stuff anymore? You go into your TJ Maxx and your Ross stores to buy these brands? Maybe. Hey, coming up tomorrow, we'll hear more in the retail space from Levi Strauss, right? Levi Jeans. And that's pretty much it for the earnings side of things. Now, after that, and probably during that, I should say, we have 5 Fed members speaking, including Mr. Jerome Powell, the president of the Fed. He'll be speaking around lunchtime there, and expect to hear a lot of consistency around what he said the other day. Literally, we do not need to be in a hurry to cut rates, right? The June rate, FOMC meeting where they announced the rate decision, we now have almost a 50-50 shot of them cutting rates. I think it should be lower. Why? Why would they cut rates? All right. I don't think I understand that one. But that's what's going on tomorrow. I'll see if I can answer any of your questions and then get back to work. You know what I mean? Pandemonium got his 401k loan last week. It was good timing. We'll see. So far, yeah. Yeah. Financial wisdom. 50% Alibaba said, look, that discount there, I'm going 50%. Wow. All right. I'll cheer it on for you, man. Yeah. GE still around. He thought GE was gone years ago. What happened? They're still here? That's crazy. I love it. Thanks, Jonathan. Good comments there. Andrew says, a 401k loan? Really, man? What are you doing? Nothing wrong with that. None, unless you're like, cashing it out, spending money on junk or something. But I'm not against it. I don't know specifically why they, put it in there. And Pandemonium, I got to go back real quick. If your bathwater's moving, you're having fun. I like that. That was what. So I'm from Texas. So a lot of times, I'll be talking about a stock, and then I'll go, it's kind of like when a horse does this or whatever. And I know I have these weird analogies, but made you think about it, huh? Did you picture me in the bathtub just for a second? Shoot, just for a little bit. Man, I'll cheer it on your Alibaba there, but that's a tough one. If you look through the there's Alibaba. If you look through the stocks that had the weaker performance today, does it concern you a little bit with some of who it was? Let me see if I can do this. This is not linked up. One second. We'll go like this, and then I hit this button. Norwegian Cruise Lines, American Airlines. I know Tesla had their separate thing today, and it was down. It was a decent attempt at a recovery, I guess. Ralph Lauren, Walgreens, the biggest losers in the market. Doesn't it kind of concern you who those were? The retail side of things, Tapestry. I don't know why they're public. Right? Enphase, the solar side. I mean, that's something we were all supposed to be going towards. The home builders in there. Of course, there's lots of home builders and all the airlines in there as the top losers. I'm not saying that they just had a losing day, but Bath and Body Works. Little bit on that consumer side of things. Remember, we need to consume here in the States. If we don't consume, we don't have an economy, right? And that can be physical products that we consume. It could be alcohol out at the bars, food, restaurants, things like that. It's a tough one. Yep. Thanks for the GE info about the healthcare part when they did the last spinoff. Yeah, they're doing what they got to do, just kind of aggressively there. We will see how that goes. Okay, so we'll be back tomorrow. We'll do this all over again, see how things go. Now, where do we go from here? Now, this would be awesome for the bulls. If tomorrow we recover any or a substantial amount of what happened today, which won't take a lot of effort, all of a sudden it's a green light again. People will believe that was a blip in the radar and it's all done. It's a failure of the pattern. If we see tomorrow can sort of continue with that weakness, look for that to accelerate faster and faster and faster, right? You didn't scare many people today, but anything below tomorrow's low, you start scaring a few more people and a few more people, and that snowball builds on itself. So it'll, we'll see. Anyways, cool. I'll wrap it up there. Wish you guys a great rest of your evening. If you're looking for a financial advisor and you're like, I don't think I can have a financial advisor, that is Jazz Wealth. Schedule a call on the website. Happy to chat with you. And we will see you tomorrow. Adios.
Hey, Dustin.
Yeah.
Everything good?
Yeah, I'm good.
Sure, everything's good?
Yeah, man. I'm fine.
Okay.